The United States has a very interesting tax system. Most of the laws were written way before the internet, and most of the changes to the laws haven't addressed how globalization has truly affected the market. I work mostly with non-residents who want to use US companies and get into the US market. And what I've seen is that without these tax law changes, most of my clients are able to operate, use US companies and US bank accounts without actually paying any taxes in the United States. It's incredible to think that you could just open a US company, open a bank account, have US clients, grow a huge business, and not actually have any income taxes to pay in the United States, but it's completely true. I want to break down some of the concepts and the code sections and the references that lead me to this conclusion, and along with many of my peers, as you can see with other videos that I've made. The IRS talks about income effectively connected with a trade or business basically only in code section 864. And 864 is pretty broad and pretty bland. It basically says that if you have a trade or business in the United States, and we can go through some of this, the sections, but they say what is a trade or business in the United States? How do you determine the income affected with a U.S. trade or business? And then the sourcing of the income as well. And to keep it very simple, if you don't travel into the United States and provided services, if you don't have an office or a fixed place of business in the United States, and you don't have US employees or other people who work for you full time who can make decisions on behalf of your company located in the United States, you do not have a US trade or business. This applies to trading stocks. This applies to doing e-commerce. Again, you're just selling stuff on the internet. You're based on the internet. It's all online. And this applies also to providing services, of course. There's some nuances as it applies to e-commerce if you have inventory in the United States because it could be determined you're doing business in the US. However, there's many ways to get around this, whether it's using fulfillment centers or things like Amazon FBA. There's many ways to get around this requirement to end up operating as well. Certainly, there's more risk in the realm of e-commerce. However, it's understood, as you can see in different texts, that in many of these circumstances, the IRS hasn't challenged it. They haven't issued any warnings or any guidance opposing this position. So, as far as we know, and as far as the IRS has told all of us, it still works for e-commerce as well. And this is all outlined in Code Section 864. And let me read a little bit of it for you. And I'll jump into actually the regulations. Because and with the IRS, we have the Internal Revenue Code, and then we have the regulations, which basically were written to explain the implementation of the code. And then which supersedes that is court cases and things like that. So I'll see if we can get some of those as well. So oh, it's right here. It says it right here, Code Section 864A. For this purpose of this part, the term produced includes created, fabricated, manufactured, extracted, processed, cures, or aged. Okay, so 864B, trade or business with the United States, within the United States. For purposes of this part 2 and chapter 3, the term trade or business within the United States includes the performance of personal services within the United States at any time within the taxable year, but does not include, and they have performance of personal services for a foreign employer, and that's in case you are here on assignment on behalf of a foreign corporation. There's different things you need to consider in those instances, which are very important as well, but that's a different topic. And here's a big one that I talk about a lot, 864B2, trading in securities or commodities. If you're buying and selling stocks in the U.S. stock market and you're a non-resident, you don't have to pay taxes on the capital gains. One distinction here is that dividend income from U.S. stocks are considered U.S. source income, and the brokerages will withhold tax at 30% at the source unless you tell them otherwise. And that's all it says about trade or business with the United States. It says includes performances of personal service within the United States, and then has what it doesn't include. After that, we talk about effectively connected income, and this is code section 864C. And this is more about telling you what income is connected effectively connected with a trade or business in the U.S. So we're talking about the actual income now. So 864C1A, in the case of a non-resident alien individual or foreign corporation engaged in a trade or business with the United States, the rules set forth shall apply determining the income, gain, or loss, which shall be treated as effectively connected with the trade or business. So we talk about the income here. It's periodic 864C2, periodical income from sources within the United States. So sources within the United States have ways to determine that. Okay, the factors taken into account shall include whether the income, gain, or loss is derived from assets used or held for the conduct of a business, or the activities of such trade or business were a material factor in the realization of gain or loss. So it's again, it's all about physical presence. It's about where you're doing the work. And then it has a section C4, income from sources without the United States. And this is what I love, because they talk about income from sources within and then without. And the within doesn't really give us much information, but the without tells us everything. Except as provided in subparagraph B and C, no income, gain, or loss from sources without earned outside the United States shall be treated as effectively connected with the conduct of a trade or business within the United States. And that's reassuring here that it's all about physical presence. So I don't want to get too much into the weeds here, but the whole point of this video was to tell you, the whole point of this video article is to tell you and show you that if you are a non-resident doing services outside the US, you can open a US LLC and operate without paying any income taxes in the US. There are filing requirements. There are forms you have to complete every year. And this doesn't apply to a corporation. A corporation is a US person. A corporation will always pay US taxes, a US corporation. So there's LLCs and corporations, but a foreigner, a non-resident with an LLC and no trade or business, no activity in the United States can operate this without paying any income taxes. There's other hurdles in terms of applying for things, signing up for things, bank accounts, credit cards. Some things are trickier than others. But for the most part, this is what I do every day, is help people set up their U.S. business, maintain the tax-free status, which is to say I advise on how to not have a U.S. effectively connected income. I help with the filings and also getting everything set up using technology in the U.S., opening bank accounts, basically everything you need to be successful with your U.S. company. So I hope this video helps a little bit in explaining all of these things. If you have questions, let us know and we'll be happy to help. Thank you for being here, and I hope you enjoyed it. Okay, I'll see you on the next one. Don't forget to like, subscribe, and do all of that stuff. Okay, bye.